So guys, now that we have officially made it to November, it is time for another dividend portfolio update. And I've got to say, in this last month, we did see more of a pullback for the second month in a row, which is very bittersweet. And in this video, I'm going to show you everything like my best and worst performing stocks for the month, all of my recent moves in the portfolio, and we'll discuss what my upcoming plans are here in November. Now, before we get into all of that, I want to hear from you. Leave me a comment below and let me know what's been going on in your portfolio this last month. Were you up? Were you down? Did you hit any crazy milestones in your portfolio? Anything cool that happened to you guys this last month? I want to hear all about it in the comments below. Now guys, getting into how my portfolio performed this last month over here on my dividend portfolio tracking spreadsheet, which you can start using for free. There is a link to download this spreadsheet in the description of the video. I hope you check it out. Now what we're looking at here is just my main taxable brokerage account over on Charles Schwab. And as we can see, it is currently valued at $90,211. We're officially in the 90K club here in this account. And as far as the dividend income goes, this one's bringing in $3,204 every single year, which is a huge jump compared to this time last month. I think at the start of last month, the projected annual income in this account had just crossed over 3K. So once again, a really big jump. But going back to this account's current value for just a second, this $90,211 is up about a couple $1,000s compared to this time last month. But it's not because of any share price gains. It's because I invested quite a bit of money into one particular company, which is also why we saw this big jump in income as well. But we'll talk more about all that later. In the meantime, looking at the breakdown of returns for the month over here using Snowball Analytics, we can see that in the month of October, I was down about 2% or about 2.1% actually, which once again is the second month in a row we saw a pullback. And even though the account value was up a couple grand, it looks like I was down a couple grand in terms of capital gains or capital losses, I should say. But still, if we look at 2025 as a whole, my portfolio is still up. It's still in the green, and we've had some really solid months. January was a solid month, February as well. August was a killer month. So I would say that 2025 has been more good than bad. And if we scroll up just a little bit, guys, and compare my returns to those of the S&P 500, to the NASDAQ, and to SCHD, I got absolutely crushed this last month. The S&P 500 outperformed my portfolio by about 4.4%. The NASDAQ gave me quite the beating as well and outperformed me by 6.5%. And we were pretty neck and neck with SCHD, just outperforming it by a little bit. With that said, if we look at the year-to-date performance, the spread widens between my portfolio and the S&P, which is beating us by almost 9%, as well as the NASDAQ, which is outperforming us by about 14.1%. So pretty bad beatings in both departments, but we are still outperforming SCHD. And once again, if we zoom out over the last 365 days, we'll see the spread widen even more. We're trailing the S&P by 10%, NASDAQ by almost 18%, but we are still beating SCHD by almost 10%. So overall, guys, the spread has definitely widened. And as a result, I've actually been getting a lot of questions from you guys wondering if, I feel like I'm missing out on any gains by investing the way that I do. And to try and answer that as brief as I can, in the short term, I suppose that I technically am missing out on some gains because both the S&P 500 and the NASDAQ are beating me this year, much of which is driven by a few tech-based names. But looking at it from a long-term perspective, I've got to say I still feel very content investing the way that I do. Over these last 5 years, it's done really well for me so far. I'm pretty happy with my returns, and also I still feel very good about the companies I own. And not only that, but I suppose it is a good reminder that no investing strategy is going to work 100% of the time. There have been times where my portfolio has beat the market like it did in 2022. It saw much less of a drawdown than everything else. And there are also times like right now where it's not beating the market. But overall, I've been very happy with my returns. And at least as it pertains to this month, there have been quite a few stocks in my portfolio that have contributed to this poor performance, which is what we'll take a look at next. Before we get to that though, I actually want to tell you about Public, which is the sponsor of today's video. So I just recently moved my Roth IRA over to Public, which is offering a pretty killer deal right now called the IRA Triple Play. For a limited time only, they're offering a 1% match, and now it doesn't just apply to retirement accounts. Any account you transfer to Public, even if it's a brokerage account, is eligible for the 1% match, and you could take advantage of the match 3 different ways. First, you can contribute to your IRA through Public and get a 1% match without accounting toward your IRS contribution limit. retirement, you can also roll over an old 401k and get the match there too. Or if you've got an IRA at another brokerage like I did, you can transfer it over to public where they'll match 1% of the full balance. My IRA was valued at about $19,000 when I made the transfer, so I got about $190 from the match, which was very cool. And another very cool thing is that public will even cover your transfer fees, so you don't have to worry about that. Now, the 1% match is just one of the reasons I'm excited to use public. They've also got some really great tools like the Income Hub here that shows how much income your portfolio is generating over time, which is super helpful if you own dividend stocks or any other income generating assets like I do. And speaking of generating income, I've also moved the cash in my high yield savings account over to public because their high yield cash account pays 3.6%. And I like that I can automate everything through their investment plans. I can automate recurring deposits, recurring buys, everything, so my portfolio can continue to grow without me having to lift a finger. All in all, I think Public has something to offer for every type of investor. The platform is both simple and very powerful to use, and the 1% match is just the icing on the cake. If you've been thinking about rolling over your brokerage account or your IRA or your 401k, or even if you don't have a retirement account and have been thinking about starting one, which every investor should, then now's a great time. Just click the link in the description of the video or in the pinned comment, or just scan this QR code right here to learn more about Public's IRA triple play and take advantage of the 1% match while you still can. Now guys, getting back to it and taking a look at my best and worst performing stocks for the month, I actually didn't have any stocks that saw any notable gains in the month of October, so we are going to skip that part for this month. All we have is a few losers to talk about, and the biggest of the bunch this last month was Main Street Capital Corporation, who saw a 9.5% drop in the last 30 days. The stock went from about $63, $64 per share to where it's at now, about $57. And if we look at the year-to-date performance, Main Street is now in the red. It's down 0.8%. With that though, if we look at my Main Street position, I'm still doing pretty good. I'm still up 40% just looking at the share price, and I'm up over 70% including dividends. So I still feel really good about this position. I think I'm in great shape with it. Moving on, one of my other biggest losers was VICI Properties, who is now officially under $30 per share again, and the stock was down 8.1% in the last month. And I gotta say, I'm really liking this. I'm very happy to see this stock pull back. And if we look at the year-to-date performance, VICI's still up a little bit. It's still up 6.25%. And if we look at my position, I'm still up about 5.2% just looking at the share price. So it's really not too far off from my cost basis, which is great. I have been wanting to add to VICI Properties for quite some time, and I think now is a pretty good time to do so. Nonetheless, on a total return basis, I'm still up about 12%, so those dividends give me a nice boost. And then guys, we've got Clear Secure, who was also down about 7% in the last month, almost back under $30 per share. Still, if we look at the year-to-date performance, Clear's had a pretty good year. The stock is up about 15%. And my position is up just a little bit as well, pretty similar to what we saw with VICI Properties, up about 5.4% just looking at the share price. I don't get as much of a boost from the dividends with this one though, because it does have a lower yield, but still we're up almost 8% with Clear Secure. And then as far as the rest of the portfolio goes, some others were definitely in the red for sure, but definitely not as notable as those three that we looked at. Realty Income was down 4.6%, Lowe's was down about the same, Snap-on down 3.2%, and then we had a handful of others that were seeing losses about 2.5% and below. So yeah, we're definitely seeing some more pullbacks in the dividend stock department, guys, which is actually a good thing. We'd rather buy stocks when the share price is going down. We'd rather be able to buy them for a cheaper price and also simultaneously lock in a higher dividend yield. So I do not mind seeing this whatsoever, and it's created some great buying opportunities, which is what we're looking at next. All right, guys, now getting into all of my buys for the month, my biggest purchase by a long shot was Watsco. I was so happy to finally add this one to the portfolio, and I kicked it off buying 16 shares at an average cost of $372.97. And you guys might remember that over these last couple of months, I had some money sitting in SGVT, which is a Schwab government bond ETF. Well, I ended up liquidating all of that, putting all of that money into Watsco to start that new position. And then I transferred a couple thousand more dollars into the brokerage account to buy even more shares. And that's why the taxable account saw a big jump in both the value of the portfolio, it was up a couple grand compared to this time last month, and also a big jump in projected annual income. It's just from this big Watsco purchase. But then in addition to Watsco, I also picked up one measly share of Vici Properties. I had like $31 in cash just sitting in my brokerage account at the end of October, so I wanted to put that to use real quick. I saw that Vici was officially under $30 per share, so I swooped up that one. And I'll probably continue to buy more Vici Properties here in November since the price is looking better now than it has for a while. But anyway, those were the two purchases in the taxable account, and then over in the Roth IRA, I did my weekly dollar cost averaging into the two ETFs, SCHD and VOO. And starting with SCHD, I picked up 12 shares throughout the month at an average cost of $27.12. And as we can see, guys, looking at my SCHD position over here on public, I'm now sitting at 484 shares of the holy grail of dividend ETFs. And it's very possible that we could hit 500 shares here in November. If it doesn't happen this month, then it will definitely happen by the end of the year. One way or another, by the end of 2025, we're hitting those 500 shares. And then as far as VOO goes, I picked up half a share in October at an average cost of $613.20. And what can I say? Overall, guys, I feel like October was a great month of buying. I'm really happy to be stacking up shares of both Watsco and Vici Properties, and as long as pricing permits, I will continue to rock with those two here in November. I love being able to buy both of those right there. And with that, guys, now moving on and taking a closer look at the Roth IRA back over here on public, we can see that it's currently valued at $22,268, and it did see a little bit of a drop this last month. It was down 0.1%, really nothing too crazy. And this $22,200 represents about a $700 gain compared to this time last month. So once again, even though the percentage was down, the portfolio value was still up. And if we take my main taxable brokerage account, which is valued at $90,211, and this one's bringing in $3,200 of annual dividend income, and add that to this $22,200 Roth IRA, which is bringing in now over $600 of dividend income, that's going to bring my combined portfolio value to $112,483 and the projected annual income to $3,807. So we did it, guys. We have officially surpassed that $3,600 mark. I was trying to get there by the end of the year, and we pulled it off with just a couple of months to spare and actually surpassed it by a long shot. My goal was to get to a point where I was averaging $300 in dividend income per month, and as you can see, we are now way past that, averaging $317, which breaks down to $73.22 every single week, almost at $75, and we're now almost at $10.50 every single day. And this new projected annual income number represents a gain of $217 compared to this time last month. We entered into October with a projected annual income of $3,590, so a really big month-over-month climb, and the year-to-date gain so far is pretty impressive as well. We started out the year at a projected annual income of $3,064, so we've added $743 to that number so far in 2025. And guys, this may be a bit bold of me to say, but I think we could potentially hit $4,000 in projected annual income by the end of the year. Right now, I only have $193 to go, and if I were to hit the contributions a bit harder these last couple of months, at a 3% yield, I'd have to invest about $3,200 per month to hit that $4K in income. Now, if I invested at a 4% yield, I'd only have to invest about $2,400 per month to get there. And to be honest, I think that's pretty doable. I'm actually going to challenge myself to get there, so that's the new goal. By January 1st, I want $4,000 in projected income. And guys, as far as my watch list goes, I didn't make any changes to this in the last month. No new additions, no subtractions, but as we can see, a lot of stocks took some pretty big hits. Wingstop was down 14%, Pool Corporation not too far behind it, quite a handful more with double-digit losses, and even if we scroll down, like Hershey Company's down 9.3%, RSG's about the same, Casey's General Store as well, Yum Brands, and even some more down here seeing some pretty big drops, which means we could be seeing some more dividend stock discounts on deck. And actually in this next video right over here, I'm telling you about 3 more stocks that also look deeply discounted and all look like great buys right now in November. So click right over here to check those out, and I'll see you in the next one.